Hi everybody, this is Phillip Guan, CPA. Welcome to the classes 11. Today, we switch from individual tax return to business tax return. Inside business tax return, we have C corporation, we have partnership, and we also have S corporation. Obviously, we have LLC. The LLC is okay to file tax as a partnership. It's also file tax as a C corporation, or file tax as S corporation, as well as single member LLC is also okay to file tax as Schedule C. So today we're going to talk about C corporation. Tomorrow we are going to talk about partnership. The day after tomorrow we're going to talk about S corporation. That will cover pretty much all different kind of the basic business tax return, because the business tax return, you may very first hand to touch it, you may feel not familiar, but if you hang on with me and sometimes maybe watch my video a few times and you also using the software to practice, you get it. It's not difficult. Okay, with that, I am going to share my screen once I get the information in, and then I will share my screen. Okay. I already spent my time to input all three tax return last week. So the training will be faster because I don't have to be actual input. I haven't shared my screen yet because I need to make sure to get into the information, and then I will share my screen. Learning tax is fun, especially after you pass the first hurdle of feeling unfamiliar. And once you get in familiar with it, it's pretty fun. I love it. I hope you love it too. Okay. I am going to share my screen. I'm going to invite Victoria to help me to read for you as well. Victoria, would you be able to see the screen well? Victoria, would you be able to see it?
Yes.
Okay.
Okay. Scenario. In this scenario, you will practice entering the following: officers' informations, income deductions, balance sheets, depreciable assets.
Okay. Now, in here, here's what, let's get a little bit more information to anybody. So that way, kind of like in here. Okay. Victoria, continue.
The Musical Corporation filed from 11/20 annually. File forms 1120 annually. The company was incorporated on June 7, 2019 in New York. The Musical Corporation owns a musical instrument store. The corporation files using a calendar year and uses the accrual method of accounting.
Accrual.
Accrual. Is it accrual?
Accrual basis. Yeah, accrual basis. In accounting basis, there's two kinds. One is cash basis. The another one is accrual basis.
Accrual.
Yeah. Okay. Thank you. Accrual basis is when you do business, regardless you receive the money or not as an income. For example, I serve my client. If I use accrual basis, I serve my client and I send them a bill. Even the client have not paid me in 2023, I have to include that revenue in 2023. So, and then accrued basis for the expenses is, if let's say I order a computer and the Best Buy is coming. I haven't paid yet, let's say. Accrued basis, I can deduct it as an expenses. For cash basis, on the other way, is the money had to be in my hand, received. The same scenario, I serve my client either via tax return or consultation. I send them an invoice. They happen not bring a check or no cash on hand, and they're gonna mail me a check. Let's say they mail me a check in the earlier 2024. So in that situation, if I'm a cash basis, that portion of money will not count for 2023, will count part of 2024 for cash basis. The same scenario, if I purchase something, a computer, which I have not been paid yet, let's say. In this situation, I will not be able to take the tax deduction for cash basis. So today, this is the company. It's a musical corporation. So this is the EIN number. And this is all their basic corporation information. I'm going to use this one. I'm going to do this. I'm going to show you the end result first. This is the end result. At the end, we're going to produce a tax return like this. You're going to have a tax return like this. Don't worry about the detail. I will walk you with every single detail. And then here's B2. And they will be balanced in here. This corporation by itself, fire tax, I need to pay tax. For example, in this situation, for federal, they need to pay 18,112. Now, let's go to how to get this done. I'm going to split my screen right now. Okay, so get here. Good. I want to minus a little bit in here, kind of like easier. Okay, so this is 20. Okay, I'm going to. Now, this is a musical corporation, which I have done it. I done it last week. All the information have been inputted from here to here. Now, the information, the prior information is down here. Under the secure question, on the far right corner, like here, blue. Anything blue, sometimes you need to click into it. Okay. So now in here, you get into the EIN, the name, address. We don't need to fill anything in here. The date of incorporation, the state incorporated, not the first year, right? Obvious. None of those boxes apply. It's the New York State, like the New York City, assuming. Okay. Yeah, it's New York, New York. So and then there's my company information. And none of those are applying. The phone number, let's say, assuming this is also a cell phone number. Musical. Oh, MUSICACO. That's what I make up numbers. Here, secure, find secure question. This says last year gross income, not net income. Last year income amount is the gross income in line one number, and that come from here. From this one, because IRS have this number, they can kind of like make sure that if you don't know the prior year of your own company, more likely you are not real for it. So that's how IRS check you. And also the address, all kind of thing in here. And also your company is filing 941, 940. Check those boxes. Those are checking kind of like secure, make sure the person filing this tax return is for this company. Okay. So for e-filing, you must fill this information out, otherwise it won't let you go. Now, in this or other, we don't need to fill. The state, I do not want to fill the state information right now, because for this purpose, I want to just train in further. Okay. Close this one. And then I go to here, the office information. Office information is in E like elephant, right here. This is the officer. And the officer is also side tax return, take care of the book. All the basic information is 100% only. That is paying 50K as the. So basically all the information in here, you fill it out in schedule E like elephant. You fill in here. Now, here is one thing you must understand that even though you put in the 50K in here as an office compensation, it will not flow in deduction. Under the deduction, you still have to put one more time 50K in here. Right here. Otherwise, it won't show. So I'm done with the officer. I go this. All the thing is not less than. So the gross revenue is obvious, it's more than 250K. So it is not less than 250K. If the gross revenue and the total asset less than 250K, is not required to file the balance sheet. It's simpler. But in this situation, it's more than. And then you need to answer this question in here. This question is in Schedule K. Like here. You see it? Like here. This question is no. Double negative. Less than. Both less than. So in this situation, more than, therefore it's no. Yes, you'll be not required for the balance sheet. Not required. Can I have a balance sheet? Yes. But if you have more than 250K, you must have a balance sheet. In this client, okay, let's talk about the revenue first. Right here, this one. So in here, as you can see, I moved this one in here to here. So make life easier, right? Income, straightforward, right? There are 4 input. The first is gross revenue. It's right here. And then the second one is return allowance. It's a client return. So it's a minus from that. Now, even though in the reality is a minus, but the input, you do not need to put a minus sign in there. You still put the positive sign. The software will minus by itself. I'm talking about this. And then the interest income. When you click in any places, they highlight everything in yellow color. So your eye should go back to look at the left side to see you click in the right places. Okay. For example, this is interest income. Your client will not be very happy if you put in the rent instead of interest. It's very easy to make mistake if you don't careful and go back to look at it. So it's a good idea, it's a good practice. You click, you keep your eye on the left to see its interest income is correct. Like this. Next. So this is what is the next one. Taxable insurance. The insurance proceed not necessarily all taxable. For the corporation, some of the insurance proceed, the insurance company pay them back is taxable. Some of them is not. So for the purpose of today's training is not talk about which one is taxable, which one is not taxable. For today's training, you just put in the taxable amount like here. Taxable income from insurance proceeds is like here. Okay, when we have a chance, we talk about more in detail. Now let's go to next one. The income is done. Let me show you what it looks like. If you show in the income portion, there are a total of 4 input. The first 2 is from gross revenue minus. See, look, 1A minus 1B equal to 1C. And then the cost of goods sold, we haven't said it yet. Once input it pops in here. And then you get a gross rate. So here is the interest. Now, this one, other income at this, and you can schedule a statement 1. If you go to statement 1, you will see it like here. So taxable amount, portion of it, the 4 input is done. So now let's look at the second portion of it, the deduction. Deduction is not difficult. They follow the first letter A to E. It's a good practice to do this. You highlight a few of them first, like 3 to 4 of them, and you come here. And then when you finish it, and you go back to the thing. Now, as you can see in here, the first one in, I already done it. Advertising, I am tapping because I already done it. Now, bank charges. So it's done. Now, I go to next 4, make life easier. Now click in here, right? You see it, it's right. So legal service is on this side. All right, let me move this one in here. It's under L, you see it? Marketing, M. So we're done. Now, it's P&R now, right? P&R now, post it. Like here. Now we go to S, all S. S. First S, salary. Like here. The salary to others. not include the salary to the office. Salary to the office is right here. This is salary to the others. Okay. Software. Supplies. Hey. Is it pretty easy? 2T. Telephone and travel. Utility and all different kind of insurance. Utility here. Do you see I'm making a mistake? I put in uniform. It's supposed to utility. So last time I make a mistake. Yeah. Now, they're all insurance. So you don't looking for the B, you're looking for I, insurance. All right, yeah. All insurance in here. The first insurance inside this is B, building insurance, liability insurance, workers' comp insurance. Okay. And deduction is done. Is it easy? Pretty straightforward. Cost of goods sold. And the A, cost of goods sold. Like here. So, start, beginning, purchase, labor, ending inventory, cost, the method using is lower of cost of market. Oh, it's not cost. It's lower market cost. Cost means how much you purchase for. Lower of costs or market. Sometimes that thing is not very good. Sell. You have to sell below the costs, and then you use the market. Does not apply, right? So we done this. Let me show you this one first. So the expenses portion of deduction or expenses, they're talking about the same thing. We just finished the income, and then this is the inventory. You already have 20K, you bought this much, and put the label of this, the total available this, minus any inventory. The real cost of goods sold this. So now, this will go to 1120S, page 1, line 2, right here. Right here. So we double check this. We check this. We check this. It's good. Now, all the expenses, we just show it. It's all in here. Now, in the text form, it's not followed by A to E. They follow by numbers. As have the number for different kind. If they are not in all this from 12 all the way to 25, and then you will be other expenses. You have to list it. Now, in this situation, all the other expenses are listed in statement 5. Right here. Do you see I have been all green check market? I green check market with the originals. So I checked everything for the income and expenses. You should check it. Like what I just did, I make a mistake in the utility is the uniform. So I just correct it. Okay. Now, they are balance sheet in here. The balance sheet input, the balance sheet you eventually will be like this. How to get it to here? Data entry. L is balance sheet. The beginning is up here. The balance sheet is as of that day, what you have and what you own and what you owe. So your bank have this 31K 477, and somebody owe you, your client owe you 6,200. You guys, the company own the tax exempt security of 47,7990, and then you are owing other people 3,600. The shareholder loan 5,000 to the company. Common stock is $200. The return earning is up to that day what you have made and earned and have not been distributed. That means you make a lot of money, you will distribute it, and then whatever left, you still left almost 100K of that value in the company. Now that is the beginning. The ending, this is the ending. The ending is close this one. Like end of the year. This is the cash, this is account receivable, this tax exempt security, account payable, and loan from shareholder, common stock. And this is the return on it. As you can see in here, you input all this together and you pops in the balance sheet. Like this. Like this. I've been green check mark it every single thing. So now the M1 will automatically generate it in here. If you need to make any adjustment, you will do. So in this situation, the income tax per book, they need to be minus. The system will generate this one. You don't need to do the input. Okay. Watch this. And the balance sheet, the return earning, you have a beginning of this equal to M2 line 1. Line 25, the beginning must equal to schedule M2 line 1. If they're not equal, something's wrong in the previous tax return. Or maybe prior years. And that is pretty much an invitation for audit. And also, the ending balance of M2, which is line A, must be equal to ending balance of the line 25 return earning. And if they're not equal, you did not do it right. Now, they could take distribution. Let's say, for example, they have their, and then they can also put money in the company, as well as they could loan money to the company. Or the company can loan money to them, either or. In this situation, as you can see, they start with loan 5,000 to, in fact, the owner is loan $1,445 more in this year to the company. But the company is making money, have that much money in there, and they still loan that much money in there. It doesn't make business sense. It doesn't really make real business sense. But that's what the example is. Maybe they need those cash for some companies' special operation uses. But nevertheless, this is how you have to match every single thing. Okay. And then the rest of the question is you have to come here. You need to answer this. Schedule G. Who owns this company? The name, the social, and the citizenship. How many percentages? If there's a foreigner owning it, and then you have to fill another form, part 1. If you have a company owning it. And then if you have a foreigner owning it, and you have to fill another forms. But in this situation, it's a US owner. Okay, now there's some questions, yes and no questions in here. We go down there. Now we need to fill this out. It's a cool basis. And what kind of businesses and what kind of store, what kind of things they are doing. In here, you have to fill no for these questions. Right here. Yes. They need to require 1099 and they do all fill it. Depends on the situation. Not always yes, not always no. And this is a no based on this given information. You see there are more. You have to paste down. You see the 2 line number because this software will generate both 1120 and 1120C. We are doing 1120, therefore we're looking for the second row column. It's all no in here. Not necessarily always no. In this example, we are no. We also know in here for these examples. All the way no for this example. You actually have to read through each and every question to answer yes or no. But the good thing is you have last year tax return. 90% changes will be similar as last year, solid. Same as last year or similar with last year as last year. When somebody say, hey, what do you do? And some partner are gonna ask you, solid. What's solid? Similar as last year. Okay. So now, and you need to put in your company information and the sales information in here. I did it on the 15th. So now, we also have asset. The asset, there's only 2 assets. The first asset is 15,000. They bought it in this year. They decided to expenses in section 179. So you have to type ESP in here. That is the law in the Internal Revenue Code, section 179, allow you to expenses this kind of asset as an expenses. 15,000, pretty good. Even though a lot more than that, 150K, 150K, you can get it as well. The second one. We are using, the cost is 43K. We're using the normal depreciation for 5 years. And under the new law, since 18, we could take a full 43K as a vast majority of that as a bonus depreciation, even though we say it 5 years. But here's how it works. So the depreciation, I'm going to enlarge a little bit in here, put in here depreciation. The first one first, you see 15K all the way. So you take all of them. The second one, 43K. Out of 43K, you have 34,400 as a bonus depreciation. You can take it. The rest of the money, 8,600, you have to be over the 5 years. And then in this year, you got this. So this will add on it as depreciation. So therefore, you add all those three numbers together, there will be a depreciation. So now it's going to show in here, like here. That's pretty good. And this 51,000 help you. Now watch, this is 18K plus. What if you don't have a bonus depreciation? Let's say the bonus depreciation is 0, as well as you don't do section 79 and you just do a normal depreciation and without bonus depreciation. Here's what it's going to look like. The depreciation will be a lot less. For tax planning purpose, sometimes you want to get the bonus depreciation, sometimes you don't. Depends on the situation. For example, if we do not take the section 179 expenses, or as well as we do not take any bonus, or you can have it is this. You only have this, a depreciation. So your depreciation will be far less. Do you see? Your income will be comes up, your tax will comes up. So for a normal tax saving, you're better off to take the bonus depreciation as well as take the section 179. So let's go back to take the bonus depreciation as well as take section 79. Right here, ESP. And get rid of this. Paste down. This. Get rid of this. We're done today. Any question for me? If you have a question regarding about what we talked today, and you can ask me questions. No question? No question is either you are so smart or I'm so good or you're all confused. Which one you guys are? Victoria, do you get it?
Yeah,
Easy.
I do, because yeah, most likely the expense from the practice booklet
Yeah.
are very same as what the tax return is asking, is what the form is asking.
Yeah.
Like advertisement
Mm-hmm.
or materials, right?
Mm-hmm.
But in reality,
Mm-hmm.
people will ask you some weird expense, right? So how to find out what is or what is not tax deductible?
Well, that will go to education and experience. It's all listed in the as instruction, 1120 as 1120 instruction. It's
And
all
such as travel, how do you look at travel? Because some people travel for business purpose, but end up they make nothing.
it is if the trouble is for the business and they ends up making nothing, not necessarily you cannot deduct the expenses. But in
Okay,
the
let's put it this way. Okay, if a person goes to a convention, obviously you don't make money from a convention, but you may learn or network or know people. So does it belongs to travel?
not necessarily 100% yes or no. You have to be in a scenario of number one, any expenses in order to deduct it. Here's the IRS rule. In order to deduct anything in a tax return, it's ordinarily necessary for the business and paid by the business. And you have to fill in that requirement. Is it ordinary? Which means like, is it someone like you in your field? Other people do the similar things? Is it necessary for your business? Is it doing this for your business? Is it this business expenses paid by your business? It's all four questions. If you answer yes, 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 and yes with documentation, even you get audit, you'll be okay. But if you say yes, yes, maybe no, that is may not be a deductible, or may not, at least may not be 100% deductible. That normally travel will very seldom 100% business deduction unless you are in a peer business trip from point the time you landed to the point you leave it, you fill a schedule to work in. And then you can deduct it. Otherwise, you should put portion it as a personal expense non-deductible. Good answer, good questions. There's no straight answer. It's a common sense answer when you ask by Uncle Sam and drink a cup of coffee, could you support it? If you can support it, and it's legal, and it could be document supported, is ordinarily necessary for the business and paid by the business, you'll be okay. Got it? Now, obvious, there's no way for the very first day you learn C corporation tax return, you grab it. And that will be amazing. But normally takes you somewhere 5 to 10 days. God give you 10 finger for a good reason. If you do practice in 10 times, you say, that's so simple. That's it. I close my eye, I can do it. Okay, with that, I'm gonna finish today's